Many of our viewers care passionately about investing in other countries, but at a moment when the dollar is super freaking strong, how can you profit from rallies in a foreign stock market? We end up maybe giving all back because the currency's so weak. That's where WisdomTree Investments comes in. WETF, the industry leader in fundamentally weighted and actively managed ETFs, and the company that's figured out how to let you invest in overseas markets without getting clobbered by the strong dollar. WisdomTree's stock is up more than 60% for the year, and despite the vicious downturn in the averages, it's barely more than a point off its all-time highs, a sign of strength. The company just reported a week and a half ago, and they delivered a fantastic quarter with a 1-cent earnings beat off a 17-cent basis. More important, WisdomTree's assets under management, U.S.-listed ETFs, the key metric here, increased by 72% year-over-year to $61.3 billion, while their assets under management in internationally listed ETFs grew by an astounding 440%. Let's take a closer look with Jonathan Steinberg, the president and CEO of WisdomTree Investments, hear more about what sets his company apart and where it's headed. Mr. Steinberg, welcome to Mad Money.
Thank you, Jim.
Good to see you, Jono. Have a seat.
Good to see you.
All right, so we just want everyone to understand, we always talking on this show about how the dollar is so strong, and people, if they just go out and buy Europe, a basket of Europe, or go out and buy a basket of Japan, it's conceivable unless they hedge, they could have lost money despite the big rallies in these countries. You've come up with a solution.
Absolutely. So we pioneered about 2 years ago at the end of 2000. Well, a couple of years ago, we introduced currency hedging in the ETF format. Our big success was in Japan in 2013 when Abe was elected. More recently, with Draghi doing QE, our HEDJ, our European exporters, currency hedged has been the big success.
Okay, now we personally on the show, our philosophy has been that unfortunately for U.S. manufacturers, we think the dollar could stay strong, particularly if a Fed rate hike occurs. How would you have done with those two versus just plain out being in without the hedge?
Well, you would have lost much of your return if you hadn't hedged out the currency. So most people don't realize when they buy international equities, they are exposed to the currency. It's not currency neutral, they're long the currency. So now the market, the ETF industry, is giving you a choice.
Right. Now, how are you able to hedge? What do you use, and how much does it cut back in the return that you might get?
These are extraordinarily liquid. The futures for the yen and the euro, extraordinarily liquid. And there's actually a slight positive carry. It actually doesn't cost you anything at the moment. It's the differential between the interest rates on the dollar versus the yen or the euro. So it's a positive.
Okay. Last night, China devalues.
Yes.
Now, this has not been a focus because it's very hard to understand. But let's say you self-index, which is what you did for China markets. Would you now say that you had to hedge, and would you ever do the China?
So there is not a China equity currency hedge product in the market today. Someone has filed for it. What we have done on China is we've taken out the state-owned enterprises. So China ex-state-owned enterprises. So you're getting a more capitalistic way to play China.
And that's good because those
Absolutely.
are the ones that are, the ones that are opaque are the ones that are not in your index,
exactly.
Which is really important. Now, you had a terrific story, WisdomTree, Explosive Growth in Barron's. They, at the end, they're talking about how it's, they think it's, this is typical Barron's, unfortunately. They say it's the pace of your growth isn't likely to continue because of your concentration in the WisdomTree Japan and Europe. But in truth, you've opened a bunch of others that have taken a lot of money, and it's the concentration is not as great as it was.
We've gone through a series of concentrations over the years. The money will flow where the money will flow. Right. So about 3 years ago, we were about 50% emerging markets. 2 years ago, about a third in Japan. Now, more broadly, currency hedged is about 60% of the assets. But we have nice balance between DXJ and HEDJ, the Europe and Japan. They offset each other to some degree.
John, if you do believe that the dollar is going to get stronger, what are the ways that you would best suggest that viewers get involved if they wanted to be in America, or alternatively, if they wanted to be in another country that could really benefit from a strong dollar?
Well, we have a strong currency ETF, USDU, which it would just benefit from a rising U.S. dollar. We have equities that are geared towards strong dollar environments, DGRO, which would be an equity for that. And then on the international side, hedging out the currency would be the best place to get your exposure if you believe that a strong dollar is going to continue.
Okay, last question. Are you concerned at all about contagion, meaning that we have seen periodically that these hot money emerging bond funds have gotten hurt. We sold that in 97, 98. Because I know you offer one. Is that something that you just want to offer for people because they may have a taste for it? Or you personally, would you think it's too risky?
So we don't actually tell you what to buy, when to buy it. The whole ETF industry is like a giant menu.
Yes.
And so we're adding choice, and for different markets and different opinions, you always have a choice.
But how do people know whether something's their risk tolerance? Because
we do it through, since we self-index, we create a lot of content that's on the website. So at WisdomTree.com, if you go to the IR site, you'll see a tremendous amount of disclosure and information on all of the ETFs.
I just think that's important because we know that things can move quickly in the emerging markets.
Absolutely.
All right, you've got the whole menu, and you've done an amazing job, and it's the products that are making people money, not just owning the countries, which has not worked out. That's Jonathan Steinberg. He's the president and CEO of WisdomTree Investments. Quite an amazing company. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.